Is SoFi a good investment? Let's find out in about 5 minutes. My name is Brian Feroldi,
And my name is Brian Stoffel.
and we're going to tell you the bull and the bear case for SoFi Technologies. Brian, what does SoFi do?
Well, SoFi started in 2012 and they were focused on student loan refinancing. But since then, you can't describe what they do easily because they do just about everything involved with money. You can invest with their app. You can store your money there just like a bank. You have personal loans. You can read everything that's there. They've kind of branched out into every section of finance. And as you can see, it is increasingly resonating with people who are flocking to the app, to the company. Not only is their growth impressive, their growth rate is accelerating, which is not something you see very often when a company hits a certain size. So that's a really positive move. Galileo is a product we need to learn more about, but it's a backbone for a lot of products that they have. And growth there is just as impressive as with the company in general in terms of their membership. And all of that translates into people using more products, which really is a code name for loans that they help originate. But you can see that those financial services products are more than tripling over the last year. So clearly, they've got something that both consumers and banks like, and all of that translates into top line growth. You see their adjusted quarterly revenue is a little bit lumpy, but when you look over on the right and you go on an annual basis, it is growing at a very steady pace.
This is a company that's growing at a triple-digit rate. I understand why investors have taken so much attention to it. So what can go right here? Well, both of us love that this company is mission-driven. They help people get their money right. That's a fantastic mission statement. It's aspirational. Two, we both like that this company is clearly a wide moat business that is expanding its moat. They have huge switching costs, as many banks do. Their product ecosystem is large, works together, and is growing. And the brand name is really starting to resonate with people, especially millennials. Three, the optionality of this business is incredible. They started out in loans and now they do just about everything. So that is something that should continue over time. Four, this growth rate is enormous, triple-digit growth rate. If that can continue, this could easily be a fantastic investment. And five, the opportunity here is just massive. The company calls out that its total addressable market opportunity is $2 trillion. So this company could grow for a long, long time.
That 2 trillion is pretty big, but there is a bear case that we need to examine too. First, foremost is interest rate risk. When interest rates go up, people usually are borrowing less because it becomes more expensive to borrow. And when that's the case, since loans are a huge part of SoFi's business, that could hurt their business. Second, we've got to look at the concentration of loan buying. This isn't a huge risk, and it probably is going to become much less so down the road, but they rely on a small number of banks to buy up a bunch of the loans that they help to help originate. Third, they have a high debt load. That's not a huge, that's not unusual for a company involved in finance like SoFi is, but it still is something that fragilizes a company.
For sure. So how did this company score on our checklist? On my checklist, it got a 58, which is well below my why bother category. However, my checklist is biased against banks, and SoFi has so many bank-like factors to it that it was really biased downward. Plus, this is a newly public company, and it hasn't been on the markets for a year. Over time, that score could easily improve, perhaps dramatically. How about yours?
On mine, it got a 6. And here's the thing. It did well in the most important part, which is mission, moat, and optionality. The thing is, they don't have a great balance sheet. They have some concentration risk. And the founding team is not there. Insiders don't own enough for it to score a certain way on my framework. So if those are things that don't bother you, then just take into consideration what is important to you. But for now, it's in that fragile range for me.
So what are we going to be watching going forward? Well, for one is Galileo. We got a lot of feedback that Galileo is the real secret sauce of SoFi, and that is the technology here that is interesting to most investors. If that can continue to grow, this company could easily be a great investment. Two, the company is not yet profitable or free cash flow positive. However, operating leverage has kicked in, and it could be shortly. If it gets there, its score on my checklist will improve dramatically. Three, they're going after a banking charter that will open up all kinds of opportunities for the company over time and lower their interest costs. That could be a major catalyst for this business. And four, just as they scale, their customer concentration risk will decline over time, to say nothing of as they pick up more members. So overall, I think that both of us agree that there was a lot to like about this